The U. Debt ceiling crisis is a looming threat to the global economy. If Congress fails to raise or suspend the debt limit by June 1, 2023, the U. government will run out of money to pay its bills and could default on its obligations. This could have serious consequences for Canada's economy, especially for the value of the Canadian dollar and the exchange rate with the U. dollar. The Canadian dollar is closely tied to the U. dollar, as the U. is Canada's largest trading partner and investor. About 75% of Canada's exports go to the U. And about 65% of Canada's imports come from the U. Therefore, any fluctuations in the value of the U. dollar affect Canada's trade balance and competitiveness. If the U. defaults on its debt, it could trigger a loss of confidence in the U. dollar as a global reserve currency and a safe haven asset. This could lead to a sharp depreciation of the U. dollar against other major currencies, including the Canadian dollar. A weaker U. dollar would make Canadian exports more expensive and less competitive in the U. market, hurting Canada's export-oriented sectors such as energy, manufacturing, and agriculture. It could also reduce Canada's income from selling its commodities, such as oil and metals, which are priced in U. dollars. On the other hand, a weaker U. dollar would make Canadian imports cheaper and more affordable, boosting Canada's purchasing power and consumer spending. It could also lower Canada's inflation rate, as imported goods and services would cost less in Canadian dollars. However, the benefits of a weaker U. dollar for Canada could be outweighed by the costs of a U. debt default for the global economy. Debt default could trigger a financial crisis that would disrupt global trade, investment, and credit markets. It could also cause a recession in the U. which would spill over to Canada and other countries that depend on the U. for demand and growth. Therefore, a U. debt ceiling crisis could affect the value of the Canadian dollar and the exchange rate with the U. dollar in both positive and negative ways, depending on how severe and prolonged the crisis is. However, the overall impact on Canada's economy would likely be negative, as a U. debt default would damage Canada's trade prospects and economic stability.